In today's video, will the SEC finally regulate Bitcoin because the new sheriff is in town? But spoiler alert, he's actually very bullish. Furthermore, Robinhood surges about 81% since IPO. Did we really miss the boat? Next, Apple partners with Affirm's PayBright on the buy now pay later trend. And finally, some more news coming right up. Welcome back everyone, I'm your host Edward, and on this channel I talk about stocks and crypto news. So if that's something you're interested in, feel free to subscribe and hit that like button down below for the YouTube algorithm. But yeah, there's some interesting news that I really want to get in today, so let's not waste any more time and let's just dive right in. So as usual, I'm just going to go through the markets, and the Dow Jones is down about 0.7%. The Nasdaq and the S&P are a bit flat, but if we look into our heat map here, we can see that majority of the companies in the S&P are down today. But there's pretty much nowhere to hide besides the semiconductor space today. But other than that, it just seems like a regular ordinary day. Now in terms of the crypto market, it is up about 3% today, and Bitcoin is up about 2.8%, and now we're hovering at about $39,000. But I did want to see Bitcoin go about 37,500 because that is a very major resistance level, and we kind of just touched it and then bounced back up. That would have been very bullish. But yeah, I'm not really complaining that it's going up, but Ethereum is also up about 5.8%. And it seems like altcoins are doing very well lately, so that's that. But the reason why the crypto market is up today is because the new SEC chair really wants to regulate cryptocurrency in a good way. And over here, he sees the market with a lot of rife of fraud, scams, and abuse, and I do agree with that. And Gary Gensler, which is this person right here, was appointed the new SEC chair in April, and no one really knew his stance on crypto yet, and a lot of people were worried. But after seeing him talk yesterday, it seems like he's very bullish. But I am on the fence on any third party trying to, centralize crypto. But the main issue that he really wanted to solve with crypto is that he wants to make sure people won't be hurt, and that investor protection is their main goal. And yesterday, right, he did say that Nakamoto's innovation is real, which tells me that he understands the crypto space and he does understand how Bitcoin works. So what he said about fraud, scams, and abuse tells me that he didn't want to approve any Bitcoin ETFs until the regulation process is finished, because the US sucks at passing laws and regulations. But the thing is, we have to consider that if it does all go well, especially if it's in favor of, the Bitcoiners, then I feel like mass adoption will be here soon. And once those ETFs gets approved, a lot of capital will be poured into those funds. But on the other hand, if it's not in our favor, then obviously that's not going to go too well, and we can expect Bitcoin's price to kind of go down. But based on the tone and what he said about crypto, I feel like he won't go through that route. But there's going to be other political figures that might have a say into this, so we'll see what's going to happen. But in the end, this could be the reason why crypto is up today, and a lot of people were worried yesterday, which is why it was down pretty heavily. And hopefully, if we do break above 42,000, which is a super key level, then we're gonna have another major bull run. Next up, it seems like Robinhood surged about 81% since their IPO, and we quickly look at their ticker symbol, we can see they're up about 26% today. And just for context, this company went IPO at about $38, and during their debut, it dropped to about $34 per share. And obviously, right, people that aren't in this stock are probably feeling the FOMO. I'm pretty sure a lot of people are FOMOing into the stock at the moment, because Kathy Wood did buy about $1.3 million worth of Robinhood stock, and now we see a massive run up. And I feel like a lot of hedge funds are finally doing their due diligence and their DCF on this company, because they do have an adjusted EBITDA, and usually Wall Street loves it when they have a positive adjusted EBITDA. And I kind of saw this coming, but that doesn't mean that I have to immediately put my money into Robinhood. And I understood like the hurdle rate is over 15% in the next 5 years, but I still believe the hurdle rate in Bitcoin is way higher, which is why I didn't pull any funds and put it into Robinhood. But yeah, I did a small analysis on Robinhood and I did really like their numbers and the way they're growing. And maybe Wall Street Bets are finally trying to get into the stock. I don't know. But just be aware there are some risks, especially with their lawsuits. And going back to the point of payment for order flow, that's how Robinhood really makes their money. And I did say the US has a potential of banning it, but the more I think about it, this is gonna hurt a lot of hedge funds and Wall Street wouldn't really like it. And the US would never want their hedge funds to lose money, right? So the likelihood for payment for order flow being banned is kind of unlikely now the more that I think about it. So I do feel like the pros do outweigh the risks now. But right now, definitely not worth $60 per share at the moment, because this is pretty much Cathie Wood's price target and we already pretty much reached it. So right now, I'll wait until Robinhood gets a breather, and usually IPOs are very hyped up. Next up, it seems like Apple is partnering with a firm's PayBright on the buy now pay later trend in Canada. So yesterday I did a video on how Square bought the company called Afterpay in Australia, but now Apple is partnering with PayBright, which is in Canada, and I guess they want to test the buy now pay later trend within their Apple wallet, most likely, because in the US Apple does have an Apple credit card. However, here in Canada we're not eligible for that credit card, which is why Apple partnered with PayBright, and I guess they're going to test out this new version of how credit card works, and maybe they're only going to test this with their iPhone, iPads, and Mac products for now. But further down the road, Apple may implement something within the Apple Wallet where Canadian citizens can buy a product now but pay it later. And I do see this trend coming very fast because no one likes credit card companies and they have a very bad reputation with a lot of people. So I mean, it is very bullish. I'm just surprised Apple didn't buy out the company outright. Maybe because a firm doesn't want to sell the company. But a firm did buy PayBright, I think last year or 2 years ago, and that was a really great move because they're both in the buy now pay later business models. But yeah, personally I'm not a fan of it, but I do see the trend going to this area because I'm able to pay my bills on time and I do get cash back. So I mean, I ain't complaining. And the fact that for the buy now pay later business model, there's interest on top of it. So if you're buying something for about $500, it isn't technically really $500 because you're gonna have to add interest on top of the payments. So that's how they kind of make money. But the good thing is that there's no fees if you do miss a payment, depending on the company, and that's a really big selling point for most people. So yeah, we'll see how this is gonna play out for Apple. Next up, it seems like Lyft finally have a positive adjusted EBITDA for Q2 of 2021. So over here, they grew revenue by almost 50% since the last quarter of 2020, but they're currently still not profitable. But the thing is, they did lose less money than they did last year. But the key point here is that the adjusted EBITDA for Q2 of 2021 was $23.8 million, making it the company's first quarterly adjusted EBITDA profit. Now, I always talk about EBITDA because I do like that more than just looking at the profits, because the tax implications varies depending on the company and how they do business. But Lyft is a software business and it has really high margins compared to a brick and mortar company like Walmart. They're gonna have different tax implications because they do own land in different areas of the world. They also have a lot of plants and equipment that holds their inventory, and that's also gonna have some tax implications. But Lyft is all based on the web, and all they have to do is kind of pay their workers, and that's about it, and improve on their software. But overall, this gives me a hint that Uber's gonna do really well during their earnings call, because obviously Uber has the most market share at the moment. But we have to consider that Lyft only focuses on ride sharing, but Uber has a lot of other revenue streams, so that could impact their EBITDA. But yeah, I totally saw this coming because everything started to open up and everything is kind of back to normal now. So a lot of people are now moving around. But yeah, in the end, I'm pretty happy for Lyft. So right now it seems like there's another shipping crisis that's gonna delay Black Friday shopping. So it seems like a key transport hub has been flooded. So a lot of goods and raw materials are kind of delivered in this region. But yeah, I'm not gonna dive too deep, but recently there has been a lot of supply chain issues, especially with shipping, chip shortages, and etc. So it seems like the pandemic kind of threw them off and they were most likely not ready, but this is more of a natural disaster, unfortunately. But the thing is, we're kind of taught to consume as a society because that helps the economy, but that actually just feeds the hunger of the government because everything gets taxed and they're getting rich off us spending, So just keep that in mind. And this whole theory of consumption just helps the stock market and the government, but it doesn't really help ourselves in terms of our financial situation. But yeah, I won't be surprised if Black Friday won't do as well if this continues, and if this really affects Black Friday shopping sales. So now I'm gonna end it off with the economy, and we can see that private companies only added 330k jobs in July, and the estimate for July was actually 653,000. So this totally missed the boat, and it shows that people are still not willing to work, and that a lot of people are still under employment insurance. So I believe employment insurance should end about September, so that's when a lot of people are probably gonna go back to work, unless they saved up very well on all those stimulus checks and could survive another year without working. But diving into a deeper analysis, I just feel like people aren't happy doing what they want to do, which is why they rather not work, right? And kind of take money from the government. But yeah, just my quick take on it, and it's not really great for the economy if we are looking into the Keynesian economics theory, because they believe that spending more into the economy is better for the world. I kind of disagree. I rather save my money and invest that into really well assets so I can have financial freedom, and that's my goal. So that's that. And lastly, it seems like apartment rents increase as young workers are heading back to cities. Not gonna dive too deep into this, but I was surprised because I thought more people would be working from home. I feel like there's gonna be a huge shift on the way we work in the future, which is why Zoom and all these other stay-at-home stocks are going up. Because if we think about it, companies have to pay for rent, leases, and etc. And that's just a lot of OPEX being put into a company. But if everyone can just work from home and everyone's still productive, so I mean there really isn't any point of having an office space. So yeah, I'm just gonna leave it at that. That wraps up for this video. If you're interested in buying crypto, please click my referral links in the description box down below, and we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm, and if you haven't already, feel free to subscribe and hit that notification bell so you can see my videos every single week. That's pretty much it, and I'll see you all in the next video. Peace.